Hello, my name is Kelly Raymond, and I'm a Forex trader. No, seriously. Forex is a scam. Yes, I said it. But just before you judge the book by its cover, let me explain a couple of things to you. The Forex game is filled with failure, heartbreak, failure at the edge of success, and sheer brutality. The Forex market can be likened to a wild animal in the forest, in the African forest. It doesn't have regard for anyone, but there are people behind the markets. Believe it or not, some people control the market. Who are these guys? And why do you think you lose a lot of money to them? I'll explain that. First off, you're coming to this video probably because you have lost money and you're losing faith in the Forex market. True, I've been there before. I've lost a lot of money. But that is where this scam begins. Right. The Forex market is designed, or by design, is made for you to lose money. Yes. So let me be truthful. Let me come out with all the truth. The truth is we're being misinformed in the Forex market. There's a lot of misinformation. Information like who the liquidity providers are. We are the liquidity providers. Whether you like it or no, you put in money to buy or sell something, you become liquidity to the other side. If you buy, you become liquidity to sellers. If you sell, you become liquidity to buyers. Because the big banks, the central banks who control price, have to balance their books. They don't want to lose. And truth is, they want the business to keep running, right? They don't want to lose, and they will make sure the other companies who are invested in them, such as the hedge funds who they have business with, also don't lose, right? They have the responsibility to ensure that they don't lose as well. Guess what they do? They tilt price against the retail traders. Every single day, they have a book, an A-book, where orders are passed. So, if there are a lot of sellers on a particular currency, the prices will continue to go up against them. Why? Because we are liquidity. The retail traders are liquidity, whether you like it or not. Now, you may have seen that. You could go to SSI, which is a sentiment index. You could also go to daily FX/sentiment to find out, correlations between prices and sentiment, right? Now, the moment people try to buy a particular currency, the moment that a lot of people are trying to buy a pair, maybe like Euro USD, the moment there are a lot of buyers, the price will keep going down. Why does that happen? Has that ever occurred to you? Why? There's a balance. Yeah, the big banks or the central banks have to make money. They have to protect the interest of their larger partners, which are the hedge funds, the brokers as well. Like it or not, they're on the side of the brokers, not yours. The corporations, especially the government as well, because central banks of any country is tied to the government. You need to understand that. They are not in your interest. The truth is, retail traders will lose money. Why? Your interest is not being protected. They don't care about your interest. That's why they put statistics out there of how many people lose. They're bound to do that. They do that because a lot of people lose and they don't want lawsuits, and they have to come forward and tell you your chances, what chance you stand towards earning money and losing. They're trying to inform you. because they know what they're doing. The truth is, it is not designed for you to make money. It is designed for them to take money from you. But that doesn't mean you still can't make money from them. You should understand that. You can actually make money from them. But chances of you making money from them is really slim. Especially if you don't know what you're doing. You could make money, trust me. But if you don't know what you're doing, you lose. Plain and simple. Banks, big banks, and the institutions, as I would like to call them, make a lot of money from Forex. Not because they are trading just like you and I. No, they're trading the opposite of what we do. They wait for us to make a move, then they make their move. As simple as that. What they will do is consolidate, make sure the market consolidates for a long time. The moment they get enough orders going in one direction, the simple thing they do is move the other direction, and they make so much money, right? The only way you can make money is when you think long term. But I would love to show you how the market, swings from daily low to daily high, then back to the middle. Well, I would have showed you, but I don't have that time. But the truth is, the market itself, in its entirety, is not a scam. It's completely legal to buy currencies and to exchange them for the other. It is completely legal. When you want to exchange your Great Britain pound for US dollars, you do it by, the first decimal numbers, right? So this is where the scam comes in. You do it in basic decimal number. You go there to an exchange or whatever they call it. Let's say pounds to dollar is 1.4. They're supposed to give you $14,000 for your 10,000 pounds. But in Forex it's different. In Forex, the decimal points actually matter. The truth is, in the real world, it doesn't really matter, right? Except when it's just about, a tiny bit of fractions from it. Let's say 14,300 or 14,500. People really don't care much about, whatever comes afterwards. It's just the main figure they're concerned about. But in Forex, you bet on those tiny little figures. That is why it is malleable. You could manipulate that. And I pity those who trade, binary options on the 1 minute. It's crazy. I'll talk about that in another video. But that doesn't mean you can't make money out of it. You really can. First, you have to step in the mind of the big traders. You have to understand that you are like venison in the market. You are the liquidity they go after. Forget about anything anyone told you about, liquidity provider somewhere. They grab liquidity from you, from me, from the retail traders. We are the liquidity. When someone is saying, oh, they're coming down to grab liquidity by creating all this weird long wick, in an uptrend, they'll create a very long wick, and a downtrend. Why? They want to hit someone's stop loss, someone who is already in that direction. You want to buy. Maybe you say GBP, you got a signal for GBP buy, and it is accurate, right? But all of a sudden, you discover the market first goes short, hits your stop loss. Then after it's doing that, just moves back in your original direction. Why does the market do that? It does that because they want to grab liquidity to move forward. They want to make money. It costs them money to run the market every single day, and they have to get that money back every single day. Where do they get that money from? You and I. They can't cannibalize themselves. No, they will cannibalize you and I. That's our money. They'll take our money. That is where it is likened to scam. The big picture Forex isn't a scam. Forex itself isn't a scam, but the big guys, the banks and the institutions, take advantage of those who know little about the Forex market. I've worked with some of these institutions by creating softwares. I'm talking about algorithms that will work, that will trade against you, so to speak. It will trade sometimes with you if you're doing the right thing, and against you when you're doing the wrong thing, or sometimes against you. And you won't believe how targeted they are. They are really targeted. I know what I'm talking about. So I must tell you, there is no liquidity provider anywhere else. There's price feed provider, which is coming directly from the interbank exchange, and there is liquidity, which is us. So the person who provides, or the company who provides the price feeds, is not the liquidity provider. Retail traders are kind of significant. 500 billion out of 5 billion is significant. 560 billion every day is put into the market by retail traders like you and I. That is a significant sum. And the truth is, people lose between 70 to 90 billion every single day. All they need to capture is their own percent out of it. Broker does theirs. Broker will trigger your stop loss early. brokers will widen the spread at night during swap time when they're exchanging swaps, or at close of the sessions, mostly close of US sessions. Like most of them will like to close before the Asian sessions. They will close out all the orders, and you will discover that's the point where they harvest your stop loss. They've done that to me a couple of times. I've learned to close my trades every single day or leave my stop loss where they are in the market. The truth is you don't actually control the market, but you try to reduce your significance in the market. You are not insignificant. The truth is, if the retail trader, every retail trader stops, trust me, the Forex market will crumble. The reason why it keeps running is because there's always new influx of wannabe traders, wannabe millionaires, people who have the dream to become millionaires overnight, keep coming into the market, and they keep doing that with the wrong mindset of earning from the market, so they lose money. But the truth is, 560 out of 5 trillion is no small money. When I'm saying 560, it doesn't mean 560 billion dollars every single day. Sometimes it rises up to 700, sometimes it rises up to $1 trillion every single day, being traded by retail traders like you and I. And they hide these figures because they don't want you to know that most people are losing this amount of money every single day, or this amount of money is coming in. They don't want you to know. It is just a way of keeping the slave down. Simple as that. Keep the slave down so he just feels, it's a number in his statistics. The brokers are incentivized to advertise, to make sure you come in, because each time somebody like you discovers this kind of video and feel, oh, okay, I'm not trading anymore. They lose one customer, right? They lose a client. So they spend that amount of money, almost 50% of the amount they gain from you, to get 3 to 4 more people to trade or to deposit. Most of them are market makers, as we like to call them. They make market on their own, for their own clients. It's not like your orders is being passed to a bank. No. You say they are not trading against you per se, but the truth is, each time you make a buy, they don't make a sell. They just sell to you and wait for someone else who sell at the same time you're buying, almost at the same time. Few seconds to do that. So some will even introduce slippage. So you wait for a few seconds, you get partial fills, and when you get somebody who take up the rest of your order, they match both of you. And then, but the first thing is, against their book, you place your order, and the order will be placed directly because you are not supposed to know your order was not completely filled. So you get partial fills. Then the moment they have someone where to offset the risk, they quickly do that immediately. Simple as that. It might be difficult to understand at first, but the truth is, you're just starting out and you've lost a lot of money. If you watch this video again, you understand what I'm saying. That being said, Forex is a scam, but it doesn't mean you can take your share of the money that comes in every single day. That is why I'm here to help you. I'm here to provide you indicators. Like I said in my first video, I'm a programmer, and I program softwares and indicators, as well as trading robots and algorithms for financial institutions and retail traders alike. I'm talking about the big guys who really have a lot of money to throw into the market and really want to they don't want to stretch their head a lot, but they have a strategy, a proven strategy. I code that kind of strategies into robots and indicators, so it allows them to be somewhere in Bahamas while the VPS is sending signals to their phones, and they take buys or sells and all that. They drop their phone, they go jump into a pool somewhere, and they have a swing, enjoy themselves. That's what I do, and that is why I'm private to a lot of information that you may not be private to. You may not have this kind of information, and that's what I'm helping you with today. So please, if you're new to this channel, please subscribe. In the link below, please hit the subscribe, right there, subscribe, and hit the notification bell so you can be notified whenever I create new content or when I upload new content. I have a Telegram channel where I give out signals and all that free. That's below as well. It's below the link as well. And yeah, I would like to share more information with you as I discover them. If you really enjoyed this video, and if this video was of any help to you, or you were able to get some understanding of the Forex market from here, please like.